What's up, guys? Welcome back to RT2CC Comic Club. Justin here again. Happy New Year to everybody. And this video might be around 10 minutes. I'm going to try and make it quicker than that, but there's a lot I want to talk about. But so let's just get into it and see how we did. So this is a 2-day recap for September 7th and 10th. So I'm catching up by 2 days because the market was closed today. So I'm excited about that, and I'm sticking to my streak. So let's just get into it. All right. So we did a lot of trades on the 10th. I didn't do any trades on the 7th, but on the 10th, I did a lot of trades. I was kind of taking some profits on some, cutting losses on the other. So you can see on the screen here, the Home Depot calls, we made a really nice return on 92%. But then I bought some new calls, and my strategy for this year in general was when I have like a good profit on a position, I don't try to like roll all of that into the same position, like let it ride. Basically, I want to take some profits and kind of keep it either in cash, or mostly what I do is I'll invest in like a different company to kind of further diversify. Plus, there's a lot of companies I like to invest in. So you'll notice when I sold those 2 Home Depot calls, I got $5,200 back, but I only spent $3,600 on the next Home Depot position. So I wanted to kind of keep that extra profit to either invest in other things or keep it as cash or whatever. So that's kind of been my strategy this year. You know, whether it worked a lot or not, I don't know, but the market's so bad that it was hard to make money with being bullish anyways. So anyways, let's just keep going. Applied Materials, I took a loss on that one. Ferrari took a loss on that one. Alibaba took a big loss on that one. And then our Disney calls made a little return on that one, but not much. And then I bought some new Tesla positions. It looks like I bought 2 Tesla calls, 315 strike, and then 2 Apple calls for 225 strike. Okay, so let's just go to see how the stocks were doing. I'm going to try to remember to mention Tesla after this, but so the Dow, was doing bad, and then all of a sudden it started doing good. So that was kind of crazy. And then it started doing bad again, and then it was just kind of all over the place. But the volatility is no surprise to any of you guys. So yeah, so that's how the market finished. Dow, Nasdaq both went down, but we did have some winners there. Let's go into our winners and losers. So we had, we didn't actually lose a lot. So it was really kind of a calm day. We only lost like $460. But so Nvidia made $660 with that one, Netflix. But pretty much small gainers on this day, and then small losers as well. So it really was kind of uneventful. So let's just keep going because no point in dwelling on this. All right, the next day, Dow and Nasdaq were doing okay in the beginning, and then by the end of the day, the Nasdaq finished up this time and Dow finished down. And then Tesla had a really good day. I forget exactly why on the 10th they had a great day, but I did see in the headlines that this was like right around the time Elon Musk had that interview with Joe Rogan, their chief financial advisor, accountant or whatever. I forget his name. So the Tesla chief accounting officer, Dave Morton, resigned. So this article is from the 7th. This other headline, Tesla CEO Musk appears to smoke weed during the Joe Rogan interview. Most of you heard about that. He actually didn't smoke. I think the author of this headline used the word appears to kind of dodge the fact that this headline was very misleading. He didn't smoke the weed. He just took a puff on it. Didn't inhale, so it doesn't count. But, short sellers will just jump on anything they can to make Elon Musk and Tesla look bad. So I wasn't surprised at all at those headlines. But what I do want to talk about, yes, I'm not exactly sure why Tesla popped right after that, though. So I'll have to check to see what happened. But the articles that I want to mention, there's 3 of them, and they were really interesting to me. Well, the last 2 in particular. So the first one I'll kind of just skim through. But the first headline was 3 reasons FANG stocks will bounce back. And the 3 main reasons they say one, FANG's, the companies remain as relevant as ever. They're really not going anywhere, which I agree with. The second one is they say that they always kind of bounce back in the past. People have called them bubbles, and they have corrected in the past, but they've always bounced back. And so they figured, the author of this article figures that they'll do that again. Now, the power of scalability goes to the victors. So this last point, they mentioned that even though Netflix didn't report as good of subscribers in that one earnings report, I think a couple quarters ago, they're basically saying, what other premium service is landing this many paying users in that amount of time? Basically no one. And then they said Facebook, had they tacked on roughly 20 million daily active users in the second quarter, which was historically a bad showing. But then again, they said, but what other platform is actually gaining on Facebook that it doesn't already own? So, I mean, Instagram is an app that's growing, but Facebook owns them. So, like, what they're saying is there's really not much competition. And so that's why they still think the FANG stocks can bounce back. And I agree with all those points. So I thought that was a good article. I will link to the description, of course, for that. Now, the next headline is yet another reason why analysts can be dead wrong. Okay, so this headline says TSQ versus Netflix. Which stock should value investors buy now? Now, the reason, like, I'm not mostly a value investor for the most part. A lot of value investors, they look at the numbers, they look at the financials, but this is information anyone can look at. So I feel like it doesn't give you that much of an edge to be like 100% value investors. Me personally, I feel like you should have some growth stocks in your portfolio to give you that chance of making a lot of returns. But I'm not a financial advisor, so don't take my advice. I'm saying that for legal reasons. But anyways, this article compared, TSQ, which is let's see, what do they stand for? Because I never even heard of that stock before until now. Town Square Media and obviously Netflix. But what they said was at the bottom of the article, they were comparing ratios. So they're comparing PE ratios, PEG ratios, price to book ratios, and TSQ had a forward PE ratio of 9.97 versus Netflix 130. So most value investors would say Netflix is way overpriced. Now, TSQ had a PEG ratio of 2.22 versus Netflix's 4.35. So I'm assuming, again, higher is not as good. You want a lower ratio. The last one is a price to book ratio, TSQ 0.5 versus Netflix 33.77. So if you're looking at just on paper, Netflix looks like a horrible investment. And they even said, these are just a few of the metrics contributing to TSQ's value grade of A and Netflix's value grade of F. So if you're reading this article and you're, a value investor, you're thinking, wow, okay, Netflix would be a horrible investment. I should definitely be investing in TSQ. Now, let me show you the charts on TSQ versus Netflix and we'll see who was right. So TSQ, I'll post a screenshot. From the date this article was published, TSQ is down 56%. Okay, so not good. So if you had, read this article and taken their advice and whatever and looked at the ratios like a lot of people do and just based your information just on the ratios, it would have been a no-brainer to invest in TSQ and you would have lost 56% of your investment. Now going to Netflix. Netflix Netflix is down 23% since September 10th. So you have TSQ down 56% or whatever it was, and then 56%, and then Netflix only down 23%. So clearly the winner here was Netflix. So even though they had an F rating, now one could argue this was a value article, as a growth stock, Netflix would be better. But still, a lot of people don't care about that. They just look at the PE ratios and they make their decisions based on that. A lot of people do. And so I just want to point out that there's more than just the numbers. You have to kind of look at the big picture. And that's why I made a video way back in February of 2017 when I first started the channel talking about my personal criteria for when I pick stocks. And I asked myself two questions. One, is this a dope company? Two, are they doing dope shit? And if it's yes to both, then I like the company and I invest in them. And so that's that's mainly what I do. Now, again, I'm learning to look at charts to kind of supplement that, but my core investing principles are based on those two questions. And I feel like if they really answer those with a resounding yes, I am definitely looking to invest in them. And that's why I invest in companies like Netflix and Tesla and stuff like that. Yeah, so let's just go on to the next article because I want to kind of wrap this up. Constellation Brands downgraded as big cannabis bet keeps a cloud over the stock. Now, they said pun intended cloud over the stock. I thought that was kind of funny. But this article is talking about how Constellation Brands was downgraded, right? So the main reason is because there's a little bit of uncertainty whether this investment will play out or whether it'll be beneficial. And it also could take focus away from their outperforming beer portfolio, which is what the article said. Now, let's take a look at the charts for Constellation Brands. And I want to give my opinion on it. So Constellation Brands is down about 24% since this article was written, and is down about 29% from its high on October 8th. And so I personally, and I mentioned this before, I like Constellation Brands. I think that was a smart investment they made with Canopy Growth. I'm actually going to be looking now to maybe add to my position or buy more Constellation Brands calls, or in the future. I'm going to definitely wait to see what happens because the market's kind of crazy right now. But you can even see, I took the screenshot just now. It's January 2nd as I'm filming this, but you can see at the bottom it says top pot analyst says Corona maker Constellation is a best stock idea for 2019. So clearly I'm not alone in thinking that this is a good, it could be a good stock to invest in, because if you think about it, Constellation, they're not growing the marijuana, they're just making beverages, and they're partnering with Canopy Growth. And the way I see it, I forget if I mentioned this before, but it might have been a long time ago. The way I see it is Constellation Brands is in a really good position because they just have to make the beverages, and cannabis is more of an ingredient for them. So if prices go down for cannabis, it'll be bad for Canopy Growth, but it'll be better for Constellation because they get cheaper ingredients to put in their beers, which would increase their margins, which would just help their company overall. It'll help their profits and all that. And so I really like Constellation Brands for this reason, and I think most people will like the cannabis infused drinks because we can't deny that cannabis is in high demand. We can't deny that. If you do some research and look at like Canada's cannabis scene right now and how it's going, like what's going on over there, products are still selling out left and right, and they can't keep that stuff on the shelves most of the time. So there's a really, really high demand for cannabis, and it's only going to get bigger as more people try it and find out that they like it. And so I'm really bullish on Constellation Brands, and I'm looking at their stock. I haven't looked at their stock in a long time. So looking at this chart, I do see it is at a really nice discount. And so I'm going to be keeping a close eye on that and seeing if I can get back in somehow. I have some puts right now, so I'm hoping that I can make some money on those if the stocks go down. The futures are currently down as of like 2 in the morning. They were up earlier tonight, but I'm hoping to make profits on those and then kind of keep that cash on the sideline to jump in on certain stocks that I like at a good opportunity. So that's kind of my game plan. So yeah, we're gonna wrap it up. So hope you guys liked the video. If you did, hit that like button and subscribe if you haven't already. I do want to make another video talking about Tesla, but I didn't want to put it in this video because it had been too long. So I will try to do that as soon as possible. So thanks again so much for watching, and I hope you have a good night. See you in the next one. Hey guys, thanks again for checking out this video. If you want another way to support the channel, please check out that Patreon link up there at the top. You get access to my private Discord server where we chat about different companies we're looking at investing in. I also post my current trades in real time, as well as news headlines with little mini summaries. And you can also get discounts on any merchandise that we sell, like a shirt like this, for example. And if you want to just subscribe to the channel, I would appreciate that as well. You can just click that black logo there at the bottom. Thanks again for watching, and we'll see you in the next one.